No property growth in 5 years. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because I thought we'd have a look at this Domain article, which is discussing the suburbs that have had no property growth in 5 years. Remember, property always goes up, and we're actually meant to be on the verge of property soaring, or at least housing soaring, because of that huge interest rate cut. We were looking at another article also out today. So I thought, let's have a look at this one from Domain, which has just recently come out. Oh, wait, today as well. Funny that. So, the suburbs in East Coast cities where property prices are at 2015 levels. So I'll bring up this chart here that we can have a look to see just the property prices in 2015. Look at the climb there. So we're right back at those levels in some East Coast cities. Would that be a good investment? You tell me. So, property prices across a string of suburbs in Australia's East Coast cities have remained virtually unchanged in the past 5 years, with an oversupply of homes and weaker market conditions leaving their median prices at 2015 levels. Prices across most cities are rebounding despite the pandemic, with house medians up 4.6% year on year across the capital cities combined, according to the latest Domain house price report. Units medians were up 2.2% year on year. But with property markets, particularly Sydney and Melbourne, still recovering from the economic impacts of the pandemic, the 2-year market downturn before it, there are still areas where prices are back at 2015 levels or even lower. Medians in more than 20 suburbs in East Coast cities remained virtually flat over a 5-year period. There you go. Is that a good investment, everyone? Doesn't property always go up? Doubles every 7 years? Well, it hasn't in these areas. Look, 0.9, 0.8, 0.4, 0.2, 0.2, 0.1, 0, 0, 0, 0, 0, 0.2 down, 0.4 down, 0.6 up, down, 0.8 down, 0.9 down. Oh, 0.9 up, that's a good one. Oh, that 0.9, you must be happy. Almost over 5 years, equal to 1 year of inflation. Fantastic. But don't worry, I'm sure the units here, you've got no holding costs. Oh, you do have holding costs? You do have sinking costs? Oh, wait, your unit's covered in flammable cladding in Melbourne? Oh, sorry. We're paying hundreds of thousands of dollars for stick-built pieces of crap covered in foam, guys. That's our civilization now. People are going into debt for 30 years for a bit of pine, bit of plaster, and usually foamy crap on the outside with some render. This is the problem being an architect. You see how this stuff is built. We've applied to do an owner-builder for our house, and we're looking at just different ways to build and save money. And, it's just nuts when you look at the supply cost of some of these materials. Anyway, people love their phone boxes. So, there you go. 0.5 up. And this is 5 years, guys, not 1 year. 0%, 0.9, 0.7, 0%, down 0.1, down 0.1, 0.5. So even if you had it in a shitty bank account for 5 years, you get a greater return. You know, property always goes up, everyone. Remember that. Sydney had the most suburbs where price remained flat or saw limited growth, with medians in more than a dozen suburbs virtually unchanged. These were mostly in middle to outer ring areas where there'd been development aplenty in recent years, creating an oversupply of units in some pockets. I think units are going to just going to cop it. You know, Haymarket, a suburb typically popular with international students, was the only inner-city suburb where prices were at 2015 levels. Hard hit by border closures, it has seen reduced demand from buyers and renters, which has put downward pressure with prices drop 8.7% over the year to a median of 1.1 million. Warwick Farm in City South and Strathfield and Burwood in the inner west also recorded 0% price growth over the 5-year period. Back in 15, 16 and 17, the things were selling hot off the plan. Of course they were. Said Norman So of Bell Property Strathfield. It was a very strong market in 17 and 18. Then we reverted back to normal market parameters. Mr. So said lending policies during the previous market downturn and in recent months had seen investors shy away from the market. Now in 2020, we're in recession. amid the COVID environment, there's been a bit of a drop-off in terms of values. Commonly, two-bedder apartments in Strathfield are selling for $850,000 to $900,000. But the same unit now would trade for $750,000, he said. That's $100,000 off. And this is for a unit. While flat, I mean, buying one of these things, even if you buy it outright with cash, it's still a liability. It's still going to be sucking money out of you constantly. While flat over the 5-year period, domain figures show Strathfield's median is up 4.7% year on year to $700,000, while the Burwood median is 1.8. Mr. So said an undersupply of listings was helping to prop up prices, but added buyer demand had also started to improve in recent months. He noted he recently had 5 bidders compete for a standard 2-bedroom, 2-bathroom Strathfield unit, which sold for $731,000, 15 more than a similar unit sold the previous month. That could just be anything. In Melbourne, where the property market is emerging from months of lockdown, it was 3 inner-city suburbs that saw little change, with median unit prices in Abbotsfield, Southbank and Doncaster less than 1% higher than they were in 2015. Richmond also saw minimal growth, with prices rising just 1.4%. See what the common denominator is in all of this, everyone? It's units. Units. Because you're just buying an airbox. Apartment prices haven't really changed over the last 5 years since 2016, mainly because they kept building more and more in Richmond and Abbotsfield, said Emily Sayers of Biggin and Scott Richmond. Miss Sayer has had strong interest from first-home buyers since in-person property inspections resumed in Melbourne, noting she had sold 11 properties in the past month, while the number of interested buyers reduced after the initial rush of pent-up demand. Most apartments were selling within 4 weeks if they were priced well. New supply was also a key factor for the lack of price growth in Hamilton, Brisbane, where the median remained flat at $505,000. Although houses are tightly held, an abundance of new supply in upscale Hamilton at a time when investors had deserted the market was making apartments a tough sell, said Richard Dixon of Connect Realty. The area was also seeing little benefit from increased first home buyer demand in recent months because many of the new units were targeted at investors. Units in inner city boho hotspot. Boho? What's boho? What the hell does that mean? Bohemian? It's not bohemian anymore. They've gentrified the hell out of West End. Come on. No. It was. You used to be able to go up the street and smoke a shisha pipe on the footpath and get a nice beer and enjoy the culture. Not anymore. They've trendified the hell out of it. Anyway. Boho, hotspot, West End, and they can't afford to live there anymore. And apartments in Pacific Pines, a northern suburb of the Gold Coast, also saw little change, with prices down 0.1% and up 0.9% respectively. Oh, the number of apartments now in South Brisbane and West End is just insane. The number that they've chucked up there. Meanwhile, houses in Mount Lewis, Townsville, which was hit by the resort's downturn, were back to 2015 levels after rebounding 11.3% year on year after years of sluggish prices. In the nation's capital, it was inner city Kingston and Greenway, a developing suburb about 20 kilometres south of the CBD, where prices remained flat. Nick Prunell of Prunell said new supply in recent years had put downward pressure on prices for older apartments, but also introduced smaller apartments to the market, which could also affect the median. Also introduced smaller apartments. It's just developers trying to squeeze out as much square meterage as they can out of their block of land. I mean, some of these apartments are shit. Honestly, you got these media rooms that are, or these internal bedrooms with no bloody windows. We've literally gone back to the 19th century where we have bedrooms with no windows. Isn't that awesome? You know, go Australian development. Fantastic. I mean, come on. I know windows are expensive, but still. While there was an initial push for new off-the-plan apartments, Mr. Purnell said buyers were floating back to more established builds, which were becoming easier to sell than new properties. He added owner-occupiers and investor activity had held steady throughout the pandemic, with a high proportion of residents in more secure employment in the public sector. Funny that. So there we have it, everyone. Apparently, the property always goes up argument hasn't worked for these ones. Doubling every 7 years. What do you reckon? As always, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Have a great day, everyone. I'll see you next time.